Welcome to Trading Capital's exclusive analysis. Today we saw the markets under immense pressure, and it's a perfect day to launch two new trading services. Here we have a new options trading, high frequency trading service, and a little bit of a slower, low frequency trading service, just trading common shares. You can find that under our YouTube profile, but we were certainly active in both sets of elite trading services. Today, the QQQ sold off quite substantially, and one of the reasons why we've triggered this hourly chart head and shoulders, a clear neckline break resulted in 6 consecutive hours of sell side pressure in your NASDAQ. Now, just because the NASDAQ sold off doesn't kind of paint the full picture of the market. You look at the S&P 500 sectors and the majority of the market was green. It was just your big XLK basket that came under such immense pressure today, violating an ever so important upsloping trend line. The question is the market now in for a potential choppy environment where we ultimately make lower lows? I don't think so. The fact that we saw a little bit of broad market rotation today, where the majority of the S&P 500 sectors held up, that is telling us that the market is kind of broadening, widening out. Capital is rotating out of some of your higher more expensive mega cap tech names that are certainly boasting high forward growth potentials and finding some more beaten down names. So that is healthy for the overall bull market trend, which is why we were certainly very, very active today on the swing trading side and the options trading side. We closed our Microsoft short, common shares short. We were short off the 547. Today we closed our Palantir short for just over 11%. We took profits on our MSOS $450 puts. First trim netted us over 105%. And there was a whole host of new trades that are coming into some epic key levels. But it was a broad market sell-off across commodities today. Gold, silver got hit. You look at uranium. Uranium took a nasty sell-off. You look at WTI crude oil continuing to remain weak. And then obviously natural gas got clobbered again with the sheer downside force in the commodity space. But natural gas is getting a little bit more interesting here. Backtesting this upsloping trend line, there's perhaps a little bit more downside. The level that I'm watching for on nat gas is this weekly gap fill. I'd love to see it hit this 277, 278 zone because that should be a much bigger area to potentially trade it on the long side. But a lot of stocks are hitting some massive support levels today. One of the beneficial things is that small caps also saw a mini pullback, but the pullback intraday wasn't that brutal in comparison to what tech saw. Small caps are strong off the open and then they got faded, but this is actually an interesting area for IWM. Backtesting a key support zone, digesting that epic 2-day pop that we saw, this is setting up for a potential next leg higher in the IWM small cap. You've still triggered that inverse head and shoulders. Yes, could it use a little bit more digesting, but the fact that IWM is still holding pretty much above these two pivots inside these previous pivot highs is a positive sign. I really want to see IWM hold this main pivot red bar breakdown zone because that's where you technically had your waterfall sell off on the IWM. Big bounce, impulse green candle. Now you're back testing that previous waterfall sell-off zone. So as long as the IWM holds there, we can still remain tactfully bullish. But if you were not managing swing trade positions today, options, if you were not looking to buy beaten down names or starting to get interested in some of those high flyers that have been outperforming, that have been pulling back, there's a lot of opportunity that is setting up with this potential pullback in the market. Could we go lower? Sure. They could easily gap the QQQ market down. But when we look at some of the key moving averages here, look at the daily chart 20 moving averages that the QQQ flushed in today. And the Qs managed to just close slightly below that 20-day moving average. Typically when stocks retest the 20-day off of a main after a nasty high all-time high pivot sell-off, you often get some sort of a bounce. Now the question is, what I'm looking for, can the Qs get outside of this red bar wide range sell-off? Or are we setting up for maybe, just maybe, another potential head and shoulders pattern? You know, are the Qs going to float up and grind and give us another right shoulder formation that takes us lower? We have to watch that. But certainly when we look at that hourly chart head and shoulders pattern, If we calculate the measured move down from the neckline that we broke today, you can clearly see once we broke that neckline, there was no real bounce intraday. And there could still be a little bit more downside selling off in this overall QQQ market until we fulfill that hourly chart head and shoulders pattern. But there's been a lot of de-risking as we head into Jackson Hole at the end of the week. J Powell is set to speak. The housing data that came out today wasn't really that bad. I mean, you got a little bit of weakness in the building permits. Housing starts were strong. Building permits could be foreshadowing a little bit of a decline and continuation in the overall market. But as commodities continue to sell off, and crude oil and nat gas and gold and silver, those should be overall helpful for the equity markets as a lot of the input costs for certain S&P 500 stocks rely on commodity prices. And if commodity prices fall, we should see these stocks likely catch a little bit of a bid. Copper still remaining super, super weak. Hopefully this analysis helps, but there was an action-packed trading session. We executed quite a few new long positions today. We trimmed quite a few short positions into the weakness, but they say you typically need to be buying this market into fear. And that being said, we are still in a very strong uptrend on the overall SPX chart. You can clearly see that we're now coming into a backtest zone of your previous little breakout candle. The market will remain in an uptrend as long as we hold this impulse green candle. I think that as long as you remain above this area, you should still likely see a high probability of a buy the dip. I still have an upside target on the SPX of about 65.80 and then some, and then we'll have to reassess from there. But overall, a nice dip, resetting a lot of technical charts, and we'll see if we get sort of a buy the dip or a rally into the end of the week. Please give this video a like down below, and see you on the charts a little later.